Hello everyone. So we are gonna talk about order blocks today. So let's just go directly into it. So this is one of the confluence we are gonna use for trading. So this will be combined with fair value gap and equilibrium to spot a better liquidity sweep. So we're gonna use that. We're gonna combine everything together at the end. So right now, we are gonna learn about order blocks. So if you guys haven't learned about order blocks before, just watch my video if you guys have not seen the previous video. But I recommend you guys to go and watch the previous videos so that you will understand what is liquidity sweep, what is order block, everything which is needed. So there is no other no other trading videos which are this basics. Like, you don't need to watch any other YouTube channel at this point, and you can actually go and watch others after watching this 20 or 30 episodes which I'm going to post. So you guys will understand what is going on in the market. So this is gonna be the best thing if you want to learn trading, guys. So let's just jump right into it. So what is an order block? So it is it is the previous candle or previous move up or down before an impulsive move up or down. I am going to explain what it is. So there's another, rule which I have mentioned. I want you guys to write it down. Always check for order blocks after a liquidity sweep or the order block before the liquidity sweep. Okay. So we are going to talk right now. I know you guys don't understand what is order block. So if you understood what this first sentence meant, I mean first point meant, then it is good. You guys are smart. I was not that smart, I guess, but yeah. So it is basically the previous up or down move before an impulsive move. See, this was a downtrending market, right? I just marked it out like that. So the previous candle just before an uptrending impulsive uptrending move, so that is called an order block. It's a similar way. So this is called a bullish order block. Okay. So usually what it will do is it will come down. I mean, I'll use this. It will come down, boom. It will tap inside the order block and then move up. So it is like a retracement tool which you can use. Even if you miss your breakup structure after liquidity sweep, you can actually enter out of order blocks. So use order blocks with liquidity sweep, guys. If you guys don't understand liquidity, go back to the previous video and watch it 10 times. It's fine. You will understand. That is really important. Liquidity is the most important. Then comes, these things so that you can actually understand the retracement. You can enter out of it. Okay. So this is a bullish order block because it's tapping and going up, and this is a bearish order block. So the market was uptrending, then suddenly an impulsive downtrend happened. So usually this will happen only after a liquidity sweep. You should make sure this is after a liquidity sweep, or else it won't. It will work most of the times, but do not go for those kind of order blocks. I want you guys to go for order blocks which is just after or before a liquidity sweep. Okay, guys. So this is the order block again. So this was going up like this. This was a down move. So do not care about that. You know how the market moves, right? At this point, I feel like every one of you guys can trade. So if you guys have watched from the starting, so this is an up candle, and the previous candle before an impulsive move down. This is an impulsive move down, and we box it out. We box this previous candle, so that is an order block. What will it do? It'll usually, not always, usually it'll come tap and then go down. This is a bearish order block. So this is a bullish order block. This is a bearish order block. I hope you guys are making notes, write it down, take a screenshot, do whatever you want. So yeah, now we will go for the live example of order blocks, guys. So what is an order block? Let me see. Let's go for a liquidity sweep first and then go for an order. Okay, this is fine. You know, this is a previous up move prior to an impulsive down move. So this is an order block. So we can take But you know why I took these three candles? Like I told previous candle, right? But why did I took three candles over here? I want you to think about it. So I'll just explain. So if I go to the 15-minute time frame right now, let me let me go to 15-minute time frame. Mm, where did I mark? Where did I mark, guys? Where was the mark? Ah, okay. See this. See this. These two candles. Now it's two candles. If I go to 13 minutes, this 2 15-minute candle will become one candle. Let me show again. If you guys are getting any confusion, I'm explaining it in a easier, simpler, most easier way. See, now what happened? So this became a one candle. So down move before and up move. I'm going back to the 5 minute. Okay, so that you will understand what happened over here. So I took this much because of that. See, prior down move before an up move. So I'll go for this much. I won't go the whole way. You can take candles also. See, this is an order block. What did it happen? It came up, tapped, and went down again. See, this happened just after a liquidity sweep over here. See, this was a liquidity sweep. If you guys don't understand what is a liquidity sweep, go back and watch the video. Isn't this an order block? Down move prior to an impulsive up move after a liquidity sweep. See, these are all liquidities. So these are all liquidities. So it swept it and then a down move prior to the up move. So we can go for this. See, this is the candle. You can also consider the wick, okay, guys. Sometimes I just consider the candle, but you should also consider wick. So what happened? It came inside, went. You could have entered a trade over here, put the stop loss over just below. Try to always. This is a tip from me. If your stop loss is like this, do not go for the same. Just keep it a bit down. Okay, and then you could have gone targeted this high. So basically, you got a 1:3 trade. It went up even more. There's this high and all those things. But ideally, you will trade this. Okay. So see, if you miss this break of structure, you could have waited for it, come back down. Like you could have put a buy limit order over here. If you guys don't know what is a buy limit, I have put a video for that also. So it will, unless it comes and taps here, you wouldn't have entered the trade. So it would have been like you just put a buy limit order, you just wait for entry, you wait for your confluence to get confirmed, and then just do your work. Trading is nothing, guys. It's so easy, man. But you just have to figure it out. You just have to figure it out. It is easy, but it is hard also because emotions are the things which is gonna mess you up royally. So yeah, is this a liquidity sweep? Yeah, this is a liquidity sweep. See, over here, this was a liquidity over here. So what is happening? The up move prior to this down move. So these three are the candles. Okay, I'll go for these three. If I go for 15 minutes, I don't want to go for 15 minutes. I mean, you guys understood, right? So we can consider these as an order block. This three candles. There is a black candle in between, but do not mess your mind with small detail. So see what happened. Did it tap? No, it didn't tap. This is an example why I told you. Not always it works. But if I went for this as a 1 hour time frame and saw this move, where was that move? I should have seen the. Okay, we'll go for another order block example. We might come into it after some time. This is an example, guys. Up move prior to a down move, guys. Boom. Go for this. We can go for 4 hour also, so that this will be in one or two candles. See, it came up, tapped, and went down. Another example. Isn't this a liquidity sweep? So down move before an up move. This one. Okay, you can keep this, but doesn't matter. We'll go for this body. I hope you guys understood. So down move. This was a break of structure. You missed this break of structure. This is why we use order block, guys. Order blocks and fair value gap. I hope you guys are understanding. Now can you connect everything together? So this you will go somewhere over here. Like you could have entered over here also. Doesn't matter. You could have entered over here also. But ideally you will enter over here because that is the starting of the candle. And you would have kept your stop loss over here. You could have targeted this high or the other high. That is the highest high. So let's see if it got tapped into. No, I don't think it got tapped. No. See, not always you get the trade, guys. This one, let's see what did it got tapped into. I'll just put the barely, guys, barely we missed that out. But yeah, that is also an order block trade. You could have taken partial profits over here. So you wouldn't have lost. So try to take partial profit. Not always it will happen. But yeah, I'll give you more examples, guys. I will show you winning and losing examples. This is a liquidity sweep. This was a liquidity, point of liquidity. We swept this liquidity over here, down move prior to an up move. These, the whole thing is a down move. Okay, you can actually mark this whole thing. But yeah, we'll mark this because we are already seeing it. But yeah, we will mark somewhere over here. Like we don't want to go for a big, retracement. Like big stop loss for us. Like a stop loss like this with this and this. Like it has like a lot of pips compared to the other one. So yeah, we will go for the last two candles for this one. We just put it like that. Entered off over here, stop loss over here, take profit in this high or the other high. I won't go more than this, or maybe this maximum this. This is the latest high, this point. So yeah, we got hit. We got the liquidity sweep. See over here also it's the same. Down move with prior to an up move. So this was the down move. I mean up move prior to the down move, the impulsive down move. So we would have entered, we would have kept our sell limit over here. See why sell limit and buy limit is important. You don't have to wait for the market to come. So we would have targeted this low. Most probably I would have targeted this low or this low or this low. But yeah, if you targeted that low, you would have lost your trade, guys. But yeah, if you targeted this low, you would have gotten this low, you would have gotten 1:2 trade. See, this is what is happening in the market. But let's go for another pair because gold is kind of impulsive. It's hard to trade in gold, guys. Let's go for another one. Liquidity sweep. Let's wait. Let's see for a liquidity sweep. Yeah, this is an order block. See, down candle prior to an up candle. What happened? It just broke structure, came back down. We entered over here. Where stop loss will be over here. If it goes down, it's our fault. Okay, it's fine. Target over. You could have gone for a big target over there, man. Like actually, you could have gone for a big target. You would have ideally gone for this. Like that is a 1:4 trade, but still it is going really well. You could have gone for this high. You shouldn't have gone for big. See, 1:6. My God, guys, is this easy or what? Are you thinking now? Now I feel like these are some advanced concepts of trading. If you want to go jump into further, like into what is happening, what do you want to know? I can make a video about it, but you can go to ChatGPT and ask why is order block working? What is happening in order block? ChatGPT, guys, you have to use ChatGPT, man. Like, ChatGPT is God. ChatGPT and other AI tools. Do you think AI will replace trading also? I want your thoughts on this, guys. So yeah, this one. Down move prior to this is a liquidity sweep, right? So always make sure you see a liquidity sweep before marking an order block, okay? So that you can actually enter, you can enter into some valid, you know, trade. So this is the up move before the impulsive, the down move. This is the impulsive down move. You could have kept this as an order block as well because there's a down move then came and then impulsive move came over here. I hope you guys can understand. Impulsive move is big, big candles. This is not that big candle, right? So yeah, we can go for this. Even if you went for this also, it's fine. You would have actually entered the trade properly. But you know, this is a proper, better order block, guys. So up move prior to a down move. You kept your entry over here, exactly over here, like just before the order block starting. Oh shit, this is a long tool. I make this mistake a lot, guys. Yeah, this is a short tool. The high is gonna be, you can keep a bit ticks up also. Sometimes you should, I just go for this only. But yeah, it is recommended you keep a few ticks up and then target over here. 1:3. We want the trade. A over here there's a liquidity sweep. Down move prior to an up move. We can go for this down move. Boom. Hmm. We messed up the break of structure. Or we can go for this also, this whole down move. What happened? You could have kept your entry over here. You would have entered off from this candle, okay? And your stop loss over here. I don't want to keep and your take profit over here. But I don't know if it went and hit. Yeah, it did went and hit. Just barely went and hit. I sometimes go for the, sometimes you should go for the body, guys. But yeah, let's see. It might have barely hit your TP. So yeah, see, did it hit the TP? Let's see. Uh, Boom. Ah, it didn't hit the TP, guys. Like, see, few ticks away from the TP. So this is why I ask you guys to take partial profits. If you don't know how to take partial profits, learn how to take partial profits because sometimes this thing is gonna happen and you are gonna lose your money. Okay, wait. Did it? Did it? Okay, I didn't lose the money. Wait. Okay. If you hold the trade, you wouldn't have lost the money. Okay, that is a hit. That is actually a TP because our stop loss is over here, right? So yeah, our TP got hit over there. But yeah, still go for the partial profits, guys. If you took the partial profit, you would have been like chill. See, down move prior to an up move. Up move prior to a down move. So this is the impulsive down move. So you would have entered short over here. Stop loss on top. Okay, this is gonna be a big stop loss, guys. I don't prefer trading something like this, but yeah, I wouldn't have traded this because my stop loss is too high. So yeah, TP will be somewhere over here. Will it get hit? Will it get hit, guys? Will it get hit or will we get stopped out? It got hit. No, wait. It still didn't get hit. Yeah, it got hit. See, you have to hold the trade. You got hit. It is a 1:2 trade because our stop loss was too big. See, it was how much pips big? 104 pips. That was a too big trade, guys. Okay, this is I'm in the 1 hour time frame. You should go for 5 minute time frame so that our stop loss will be smaller and it'll be a faster trade. So usually mark your order blocks and everything in the higher time frame. If you mark it in the lower time frame, Most of the time it won't be respected unless it has a liquidity sweep happening. So for here, for example, I'll just delete everything off. Over here, there's a liquidity sweep happening, guys. See this? Let me adjust this first. So yeah, see this? Liquidity sweep happened. We didn't get an impulsive move, but you could have considered this as an order block also. This whole move, but this one, you could have entered off. Two times you could have entered. Three times you could have entered off of this. Or else you could have entered of this order block as well. See, this is a proper order block. Down move before the up move. So you would have marked this down move. So see, after this break of structure, you would have kept your buy limit and this candle tapped inside. See, almost every time this is repeated things in the market. Pattern recognition, guys, pattern recognition. You guys have to play in the code before, you know. Like if you just watch my videos, it won't work. Go and do your homework. Like find 10 of these in the chart. Just watching my videos won't help. You guys have to see, like you guys have to train your eyes on how to, spot these order blocks, fair value gaps, liquidity sweep, and uh equilibrium. Equilibrium is really easy, guys. Actually, it is the easiest, I guess, out of everything. Liquidity sweep is the hardest. Order block is also not hard. So this will be your target, most probably. So yeah, you got a decent trade over here. Or you could have targeted this also. This high or this, ideally this. I won't go for the wick. So it came down. It just, you know, scared us a bit and then went up. Hold the trade, follow your rules. Always, I'll give you some trading rules video in the next upcoming, because I just have to teach you guys how about liquid, equilibrium and like premium and discount, and maybe 79% extension, because that is not required that much. But yeah, you can actually go for that because I like TJR's review. So he used 79% extension. He's my guru, guys. If you guys don't understand anything, go and watch his videos. He has a boot camp. So I'm promoting TJR from my video. So go and watch his boot camp if you can, because it will help you a lot. I trade like almost like TJR. But yeah, I use a bit more differently. I trade a bit more differently. Everyone should trade slightly differently. I mean, you can follow our trade also. People make money from these things because I use an additional indicator, I mean, tool called VWAP, anchored VWAP as well. And then, some of the support and resistance ICC concept, not ICT, ICC, ICC. There's another concept. So yeah, this is how I trade. See, down move prior to an up move. You also take the wick. It came out. Boom, liquidity sweep happened. Came up, tap, went down. I guess this is enough for you. So that's all for order block. It is an easy concept to understand. If you guys didn't understand, watch me do the examples. Always do the example. Always see the graph. I don't want to, give you a lot of theories and theories and theories. Just see it in the graph. And I hope you guys understood why I took three or four candles before. Like the up move. See, this is also a liquidity sweep. I'll give you one more example. See this whole candle, down candle before that one. See, this is a order block. After this, you missed, came back, tapped in, and went down. Could have targeted over here. I mean, the target is based on the next liquidity point. So you can always put your partial take profits over there. So you would have entered over here, stop loss over there, TP over here, TP over here. So that is a 1:2.6 trade. Yeah, that's all. This is a fair value gap. See, similar thing. Fair value gap also does the same thing. For retracement, we use fair value gap, equilibrium, and order block. Oh, equilibrium, I didn't teach you guys. Okay, order block. And for continuation, we use 79% extension. For liquidity sweep, we use something else. Okay, guys. So yeah, there are people over here. So I hope you guys understand everything. So bye bye, guys.